Hey all, welcome to ShareTrek. This is Raj here. Today I want to talk to you about the indices, the genomic stocks and interest rate or macroeconomics. This is one thing I promise to do once in every week. And today is the day for that. I also want to take the opportunity to talk about my Tesla shares and arrogant billionaires. And I guess you guys also have your own pet peeves around this. But I'd like to hear from you what you think. Overall, the weather here has been terrible for us in Toronto. We had a bit of snow, and then we had a bit of hail, and then rain. Temperatures are still very low, around 2 degrees or something, 1 to 2 degrees, and it's cold and miserable out there. So nothing much to do outside for today. But that said, let's get started. Welcome back, friends. Well, the market participants initially jumped with joy as soon as the CPI was announced, and the CPI showed a drop. These were sheep being led to slaughter, in my opinion. Remember, I had mentioned two things before the CPI was released. Point number one was that the market will find any CPI reading to be an excuse to drop further. If inflation dropped, they would worry about recession. And if it increased or stayed the same, they would worry about Fed getting hawkish and raising interest rates faster. And in either case, the natural reaction would be for the share market to drop. And the initial raise was followed by a swift drop. And the other point that I said was that we cannot be sure until Jay Powell speaks. When he did speak, it definitely tanked the market. So what exactly happened? The initial exuberance led to a rapid rise in the index like a sugar high, and it was followed by a crash. Turns out that the Fed is still hawkish and would continue hiking rates until inflation comes into its target range. And we are at present way out of the target range, and that implies more rate hikes. Apparently, the Fed is not worried about pushing us into a recession, and the easing of supply chain issues probably reduced inflation, and also there are many back orders that were supplied to the stores when the congestion at the ports were cleared. That led to a lot of discount sales. Those things have definitely contributed to reducing inflation. It also got some help from lower oil prices and lower freight costs, but the service inflation has continued to remain strong, and that's the reason why the Fed is very hawkish at this point of time. And service inflation is strong due to tight labor market. Out here in Canada, the thinking is that when the globalized production started faltering, local production will increase, and with it, the inflation will be here to stay. You see, a Chinese worker is paid much less than a Canadian worker, and Canadian companies have to follow lots of rules and pay into pension plans, etc. This means that the cost of producing the same commodity with the Canadian labor is going to be way more expensive than producing it with Chinese labor. And that's the reason why the Canadian authorities feel that the inflation is here to stay. This has caused a fear in the Canadian market that the housing market will be the next casualty. We have a stress test out here that needs a mortgage applicant to qualify for a couple of percentage points above the posted interest rates. It made sense when the interest rates were at 0.75 or maybe even 1% or 1.25%, but we are now at 4.25%, and adding 2% on top of it gets us to an interest rate of 6.25% at which people have to qualify. This measure was designed to make sure that consumer did not take many risks, and it was to avoid potential foreclosures for people who qualify very marginally, and then later on they find out that when the interest rate go up, they are not able to pay anymore. So, however, what it did was perversely, it ended up doing exactly the opposite. During rising rates, common wisdom is to lock in a fixed rate mortgage. However, since variable rates are lower than fixed rates, the measure pushed many people to opt for variable rate mortgages in order to clear the stress test. All those people are now paying increasing installments and are being stressed every time the Bank of Canada increases interest rates by 50 basis points. An average house in Toronto costs $1.09 million. So you can imagine how high the monthly mortgage rates will be to buy a house. What this means is that we will have dropping home purchases, and renters who were planning to buy will be priced out of the market because they will not be able to clear the stress test, and they will continue to stay renting. And our generous immigration policy will bring in new immigrants. Almost 465,000 immigrants are expected to come to Canada, and this, I would say, out of this, around 40% will end up in Toronto. What this will do is that while rental stock is not going up, renters are not moving out, and new investors are priced out of buying rental properties to increase the supply of rental stock, we'll have a bad situation with more immigrants coming in and the rents being sky high. I really feel for the new immigrants who are coming in right now. I don't think they have a chance to get a decent accommodation, and without a credit record and without previous landlord references, they are going to have a very tough time. As a real estate broker out here, I do a lot of social service by helping new immigrants who come in and get referred to me. I help them to find apartments, even if it does not involve any commissions for me. I do that mainly because when I came here as a new immigrant, I had no one to support me, and I was rejected at many places. Some places the landlord would refuse to show me even the property, because the first thing they would ask is, do you have a Canadian credit record? You don't have it because you have just arrived to the country. And the next thing they ask is, do you have a job? You probably don't have a job because you've just come in as an immigrant, and unless you get the social insurance number, you can't get a job, and it takes around 15 days to get the social insurance number in the general course of time. So most new immigrants have trouble, and again, if they ended up here in winter, definitely they don't have a car, and they would have a baby and a wife, and how are they going to go and find an accommodation? So I generally step up and I try to help out new immigrants, and I generally see this problem, and I try to convince landlords and others to give them accommodation, and sometimes I do guarantee if I know the person personally. But at this point of time, I think even I can't help many immigrants because the market is very, very tough. And in the rent-controlled stock that we have here, we have two types of stock in Toronto. The previous government, which was a Liberal government, many years ago, I think it's almost 6 or 7 years ago, we had a Liberal government for almost two elections, Liberals won. And then we had a city councillor who was from NDP, mayor who was from NDP. Basically, what had happened over the period of time is that the policy decisions put in place rent-controlled stock. All the properties were rent-controlled, which meant that if a tenant moved into a property, the landlord cannot increase rent more than what the city would say, and the city generally kept it close to the inflation rate. So once a tenant moved in, they had no incentive to move out, because if they moved out, they'll be competing for rent in an open market, and they'll end up paying more. So what this started doing was it started creating disincentive for the landlord to maintain the property, because they were paying higher property taxes, higher mortgage, and they were facing inflation in their personal expenses, but they were not able to get anything more out of their properties. And the capital gains were going up, so many landlords were incentivized to sell the property. But unfortunately, the rule in Toronto is that if a tenant is in a property, you cannot kick out a tenant. And the only way you can have the tenant out is if you are going to occupy the property yourself. So this became a big problem, and we started having ghettos where the property quality and the landlord-tenant relationships were not going well. So when we had a conservative government which took over in Ontario 5 to 6 years ago, the first thing they did was scrap the rent control. So all properties after November 2019, I think, are not in rent control. So those properties, the landlord can raise the rent anytime. But there is a proposal again to bring in some kind of rent control. So that's something that I'm watching out for. And also there is going to be a percentage of all new builds that will be devoted in a project for subsidized housing. So all these are going to change the form factor of the Toronto real estate market, and in this it's going to be difficult for the economy, because a good portion of Canadian GDP comes from the housing sector. So this is the overall status. Now, amidst all this thing, the government is now offering a one-time tax-free payment of $500 to low-income households as rent subsidy, but they have to apply by March 31, 2023. This is a one-time $500 payment. It's just a drop in the ocean considering the high rents out here. I'm afraid that either the central banks will have to capitulate or we'll have a foreclosure crisis, especially because people who borrowed at 0.45% rates will soon have their mortgage coming up for renewal, and they may not be able to afford the mortgage payment under the new rates, which are going to be at 4.5%. And will suffice to say, in Canada, we are in deep trouble and likely a recession is impending. I'm totally pissed off with Elon Musk. That's my next pet peeve. My portfolio is not multi-million dollars, but it's big enough to bother me when my major holding of Tesla stocks loses 50% of value. And the CEO seems to be, carefree, and he has become a chief twit who behaves erratically. Where meanwhile, Mercedes, BMW, Audi, and GM are making fast progress in the EV segment. Hyundai and Kia already have successful EV in the market out here, and they are gathering market share. Tesla models need a refresh. Elon Musk seems to be selling more Tesla stock to dump into the Twitter black hole. We need a new CEO either at Twitter or at Tesla. I hope more Tesla investors demand accountability from Elon Musk. It has never been a good idea for a business leader to dabble in politics and social wedge issues, and Elon Musk is just getting into those areas, which is not at all comfortable for the brand, both for Twitter as well as Tesla. So I hope that he gets out of it, or either people get him out of Tesla. Something needs to happen. Now let us turn to the indices and see what they have in store for us. Well, here we are in our TradingView platform. I'm looking at NASDAQ futures. NASDAQ futures are down 0.98%. And if we look at the chart out here, we have a flag kind of a formation out here. We have, let me draw this out. It looks like a cone more than a flag. That shows increased volatility. So, and our MACD is bearish as well as momentum is dropping. So it's not looking great out here. Now, if we were to, let us convert these supports into resistances while we are still here. They need to be converted to resistances. So we have resistances, and our immediate resistance is from this orange line out here, which happens to be the 50-day simple moving average. It's sitting at 11,425 or 11,448. I'm not able to see it very clearly out here, but it's around 11,448 at this point of time. So that's our immediate resistance for Monday. And if you look at the indicators, US oil is at 2.37% negative. And as we can see, it is still in the bear channel that we created during our last review last weekend. So that still continues to be the case. And it's also being tightly wound around the 10-day simple moving average. It's going around the 10-day simple moving average, which is currently at 74.40. And it was the last support, and I think we have already breached that. We'll have to see what happens tomorrow. The MACD seems to be bullish, but the momentum is very weak at this point of time. So it seems that we are likely to come back closer to this diagonal line of support out here before we go up again. And if we were to look at the NASDAQ, I'm using QQQ as a proxy for NASDAQ out here. We have come very close to the bear channel resistance that we had before. If you recollect, this is our bear channel in which we were traveling for the longest time. We had briefly come out here and then fallen back. Then again, we briefly came up here and we have fallen back. Right now, we have got heavy support out here at 373.01. And we are likely to bounce up from here, but then I'll have to mark these earlier supports as resistances, which is what I'm going to do right now. I'll mark the resistances here. So we have a resistance which is at 278.43. That's going to continue to be a resistance for us. And we'll have a support which will be at 271.57. So that's our range. And MACD is bearish and momentum has also fallen. So the index is looking bearish. S&P 500 was down minus 1.43% as of Friday. And our resistance was again the 50-day simple moving average, which is this thick orange line out here. And it's at 385.70. That's going to be our next resistance. Our support will continue to be 381.55. Of course, the S&P 500 is also looking weak, and we are still within the big bearish context out here. Russell index was down 0.75 on Friday. We continue to have a support out here at 172.14. And our next resistance is the 50-day simple moving average, which is currently sitting at 178.98. Our MACD is bearish and momentum is also very, very low. So not looking great either out here. And if you look at Dow Jones Industrial Average, it has gone down 1.15% as of Friday. And it is still bounced off the resistance of the previous bear channel, which I have marked as a support out here. It bounced off that support, and it also bounced off the 50-day simple moving average, which is sitting at 325.04. So this is going to continue to be a support for us on Monday. MACD is bearish and momentum has dropped below the 50% mark. So Dow Jones is also looking weak. If you look at VIX, VIX has been surging a little bit, and it has got support from the 10-day simple moving average, which sits at 22.48. Right now we are at 22.63. MACD is bullish and momentum is just about at 50%. So we'll have to see what happens on Monday morning. If VIX picks up, of course, our indices are going to fall down. And if you were to look at the US dollar index, the US dollar index, which had been steadily coming down, has been going up for the last two trading days, that is on Thursday and Friday. And it has now finally managed to cross over the 200-day simple moving average, which is this thick white line. And the 200-day simple moving average sits at 12,920.41. And that is going to be our support going forward. MACD has turned bullish. Momentum is picking up, but it's still below 50%. So we'll have to see what happens with the US dollar. The lower the US dollar is, the better for us, because then the funds will start flowing into the other markets, including the indices that we look at, and it's likely to be a positive catalyst. So we want the US dollar index to stay low, but if the US dollar index starts surging, then we can see more cash getting out of the stock market. That said, let us go and look at genomic shares. Oh, I forgot. Let's look at the index movers next, and they are going to be here. Microsoft. So Microsoft has been dropping in the last two sessions, Thursday and Friday, and it has fallen below the last support it had at 245.15. So that's now a resistance. And its next support is going to be at the 50-day simple moving average, which is this thick orange line, and that's at 239.55. And also after that we have a horizontal line of support, which is at 238.81. So these two are going to be very, very strong supports for us. MACD is also bearish and momentum has just about fallen below 50%. So Microsoft doesn't seem to be in a mood to help the index on Monday. Apple is down minus 1.46% as of Friday. 4 consecutive days of negative price trends for Apple, and it's been a very, very steep fall. MACD is very bearish. Momentum is also shot down significantly. Apple doesn't seem to be in any mood to help the index at this point of time. Amazon also had 4 straight days of drops. However, the MACD is still bullish and momentum is not very good. Google has had 4 days of drops, and again, MACD is very bearish and momentum is also below average. So none of that is looking any good for the index. So I don't think index movers are inclined to support the index. And if we look at commodities, wheat has also fallen, and so has copper. And if we were to look at genomics now, which is what I wanted to check out first, I've trimmed down the list of genomics. I've sorted it out. The biggest gainer was DNA, which gained 6.13%, and it is still at 1.73. If you looked at where it was just in around 16th of August, it was at 4.21. So this is a very big drop, and many things have led into this drop. Watch my latest video that I posted a few days back on DNA. I think I posted it maybe yesterday or something. Just check it out. I've mentioned all the reasons why DNA has gone weak, but I still think DNA is a good company and it's got a good proposition going on. So check that out. PSEB was up 5.74% on Friday. And this cup and handle pattern doesn't seem to be taking off further. It met its objective and it's now on its way down. There is no building up on the target of the cup and handle. So I think Friday's trade was a bit positive. but we'll have to see what happens with the market, because MACD is bearish and momentum is just above average. So there is inherent strength in PSEB, but if the overall market goes down, I think PSEB will follow suit, especially because on a hard day PSEB was positive. So there's going to be some amount of profit taking with jittery stockholders, and that could push PSEB back down. Editas was up 2.60% on Friday, and it bounced off the support here at 9.45. It opened lower. It also got support from the 10-day simple moving average, which is the thick yellow line out here, which is sitting at 9.88. So together these two gave a lot of support. 9.65 also gave a support, and therefore we bounced up. But we are going to have our first resistance from the 50-day simple moving average, which is this thick orange line, which is sitting at 11.22. The MACD is bullish, but momentum is still below average. Again, the overall market is likely to impact the fortunes of these companies on Monday. And if we look at Invitae was up 0.96%, and it's been struggling to break this resistance out here at 2.15. I have to mark this as a resistance so that you know it's a resistance, and we still have support for us at 1.86. So I'm thinking that Invitae is going to be range bound between 1.80 and 2.15 for the near term until the market gets some direction. Intelia was down 0.90%, and our 10-day simple moving average continues to be a resistance. It's currently sitting at 38.76. MACD is bearish. Momentum is also very, very weak. So Intelia is not looking that great. ARCG was down ARCG was up 0.90%. It's a very, very small candle out here, still being bounded by the 10-day simple moving average at 30.72, and that continues to be the resistance. MACD is bearish. Momentum is also below average, not looking great. Beam Therapeutics was up 0.54% on Friday, but we still have resistance out here, of a minor resistance at 43.99. And we have a support at 40.22. MACD is bearish. Momentum is also below average. Caribou Biosciences was up 0.39% on Friday, but it has got resistance out here at 8.25. So I'm going to convert this into a red color line. And we have Bluebird, which was down 1.03%, but it's still on a bull track out here, so I won't worry as yet. MACD is bearish, but the momentum is still above average. Verve was down 1.28%. As of Friday, and it has converted a lot of supports into resistances on its way. First one is 22.47, so I'm going to mark that as a resistance, and the next one that was converted was 20.82, so I'll mark that also as a resistance. And also in the process it converted the 10-day simple moving average, which is this thick yellow line, also into a resistance that is sitting at 21.43 presently. MACD is bullish, but just about ready to cross over to the bear side. Momentum is also weak, so Verve is not looking great. CRISPR Therapeutics was down 2.29% on Friday, and in the process it converted the last support that it had at 47.93 into a resistance. Allogene was down 2.40% on Friday. It had 4 consecutive days of fall, and it bounced off the support at 6.53, and 6.53 still continues to be a support. And MACD is bearish, and momentum is below average and has gone way below the 30% mark. So it's ready for a dead cat bounce, so there could be some positive momentum on Monday. IMTX is down 2.69%. Again, the MACD is also bearish, and we bounced off a support at 8.80, which is going to continue to be the support on Monday. We could potentially see a bounce back on IMTX on Monday. Illumina was down 3.82% on Friday. It's within our support zone, so we are likely to bounce off from 196.44, which is the bottom of this box. MACD is bearish, momentum is below average and dropping. Bionano Genomics was down 6.74%. It still has resistance from all the moving averages. MACD is bearish. Momentum is also below average. SQZ Biotech was down 13.21% on Friday. Look at the chart, how weak it is. The MACD is absolutely bearish. Momentum has dropped. It's like bottomless pit. So this is bound to bounce back on Monday because it's very, very severe drop. And there has got to be a bit of bounce back out here with people thinking that it's reached the bottom, and they will start bottom fishing, and that's what is going to push up this stock. for the time being. So that's all I have for you in this session for trading. But when I look around me and I scan at all the things that are happening, there are a lot of serious problems in the economy which impact common people like you and I, and the ordinary worker, the ordinary housewife, the ordinary white-collar employee, or the truck driver. Everybody has a problem which needs to be handled, the problem of inflation, the problem of tight labor market. All these things need to be solved, and the government needs to be very serious. And at this point of time, I do not see the seriousness reflected in the US. And also the billionaires who are supposed to be intelligent, bright, and responsible are not showing any responsibility at this point of time. So US is getting stressed out big time. And our global crises are not yet abated. We still have high COVID rates in China, and we still have the Russia-Ukraine crisis going on. And of course, Germany has made necessary efforts to get LNG conversion done so that they can switch away from gas purchases from Russia. But all said and done, even Germany had an uprising recently where a group of right-wing people tried to take over the parliament. So all these dysfunction is coming because people are starting to lose their confidence in elected leaders and government. And all the dysfunction that is created by these billionaires is feeding into it. And for common law-abiding people like you and I who invest in the share market, do our 9-to-5 job, save up and look forward to retire, this is causing a lot of chaos for us. And this is not in our control. Earlier, it used to be one person, one vote in the US, but now with all the dark money and the super PAC coming in and the Citizens United decision, all these billionaires are channeling money through non-profits which can shield their identity, and these non-profits in turn push money into super PACs, and they are putting candidates who are illiterate or uneducated or unqualified so that they just blindly follow what these dark money interests want them to do. So this is the situation out here. I really hope for all of us that better sense prevails and the voters manage to see through all these things, and we have a more functioning government. The Senate is going to be a check at this point of time for the House, because when the GOP takes over, I'm expecting total dysfunction in the US government, and that's going to prevent them from helping anybody with any measures, and that's going to further disillusion all the citizens about government and the leaders. So I hope better sense prevails, and the reason why I'm worried, even though I have no stake in the US other than the stocks that I buy, is because as a neighbor in Canada, I can feel the ripple effect out here. A stable and strong US is good for the whole world, including for Canada. So I'm rooting for the best in the US. Let us hope for the best. I hope you guys enjoy your holidays. It's not all doom and gloom. Better days will come ahead of us. But let each one of us do the right thing by being a good citizen and doing what is right, and taking care of our own budget and our own families. Bye for now.